Hi guys, hope you're all studying well for your examination. So this video is in relation to the new study material that was rolled out by ICAI, which is applicable from May 2025 attempt. Frankly speaking, guys, there was no need for them to release a new edition of material altogether because there are insignificant changes that were introduced in the new study material. AFM is not a subject that will be subject to frequent amendments or changes unless there are changes in the topics itself. There are topics included or topics deleted. So if you are referring to the old study mat of ICAI and if you're referring to our 2023 edition or 2024 edition of RCA's material, that will be sufficient, guys. It already has an extensive list of all the questions, study material, RTP questions, your mock test papers, everything is already included in them as such, guys. So let us quickly, this is going to be a very short video but are covering the changes that were introduced in the material. Talking about the very first change, so in the first chapter, guys, financial policy and corporate strategy, they have included a new concept of external funding requirement. This external funding requirement was not forming part of old study material. They've introduced it in the new study material, but this is exactly the same question that was asked in Jan 2021 attempt. So we have already covered this question as a part of general problems. If you see, there is in the end, but there are few questions that do not come under any specific head. I have included them under general problems. So we have already covered this question as a part of general problems. So there is nothing that you will have to do. I just show you the question better here. They've included, this is the new study mat chapter 1. So this is the question that they have included in the new study mat as such, guys. We have done this question. The numbers are exactly same, just one extra zero here in the new question of ICAI study material. So there's nothing again that you will have to worry about this concept of external funding requirement. In chapter number 3, that is advanced capital budgeting, there was a wording change in one of the questions. That wording change was important because the answer as per the old mat was not correct. It is capital budgeting with inflation. They were not considering the impact of depreciation. So they've changed the entire wording itself in the question as such, beta, so that the answer becomes relevant. Again, something that you do not have to worry about. You can simply neglect it. Whatever we have done in the classes, that is sufficient. You just refer that. Chapter 5, security valuation, they have introduced an additional explanation. They have introduced extra explanation for yield curve. Now all of these explanations we have already covered in our concept notes. We have done the concept of yield curve. I told you how the concept of spot rates work, different maturity spot rates. We have understood about different types of yield curves. So again, something that you do not have to worry about, you can simply neglect. In same chapter under bond refunding decisions, they added 2 sentences in relation to overlapping interest. We have also done that as a part of practical question, overlapping interest. So again, do not worry. Chapter 1, financial policy and corporate strategy, you do not have to worry. Chapter 3, advanced capital budgeting, you do not have to worry. Chapter 5, guys, you do not have to worry. Chapter 6, portfolio management, there is this one illustration number 6. So that question earlier had not only computation of beta factor, it also says what is your observation. So you were simply supposed to comment on the beta value. Now the old study material did not have explanation for this beta factor. Just give me a second, guys, searching for the question. Yeah, the old study material did not have explanation for the beta factor, guys. The new study material included explanation for the beta factor. That's the only difference. But the same question that we have done in the class, guys, when they've asked us to comment, we have compared actual return of every security with the required rate of return of every security to check whether the security is undervalued or overvalued. यहाँ पे वो लोग क्या किए बेटा, कमेंट पार्ट में they have interpreted beta factor. If beta is more than 1, it means the risk of the security is more than the overall risk of the market. If beta is less than 1, the risk of the security is less than the overall risk. There's an additional question. There's similar question is also there in the other part of the study material of ICAI. But वहाँ पे बेटा अभी भी old comment ही चल रहा है. You still have the old comment there. That means you will still compare required rate of return with actual return, and that comment part is same. So for the examination, you can follow both the comment part. You can comment on the value of beta and also comment on undervaluation or overvaluation of security. There's one other question in which the answer has been changed. If you recall beta, it is this question. You will see this in portfolio management. These are the questions wherein we took weird assumptions like market comprises of only 4 securities. Our portfolio also comprises of only 4 securities. For market, we have assumed that the number of securities are equal. For portfolio return, we have assumed that equal investment is made. So what they finally did, beta, is that they gave an alternate answer wherein our portfolio comprises of these 4 securities. We are computing our weighted average beta using investment in these 4 securities. And then guys, we are computing risk-free return using Government of India bonds. We are computing market return using CAPM return. The answer is, more practical now, but then both the answers have been given. There are alternate answers given. You can follow the earlier answer, you can follow the latest answer, up to you as such, guys. There was one mock test paper question, April 2024, in which the question was very clear that you're supposed to compute weighted average beta. So when we solved question in the class, we had to assume that investment is equal in all the 4 securities. So that is why we do simple average beta. अगर अभी weighted average beta बोलता है, you will have to compute beta based on values, and after that equate that in the risk-free rate. So you can just go through the solution of this question once as such, guys. You will understand it. These are the only minor changes as such, guys. So everything is normal. Comment on beta part, and this portfolio ka one single question. You go through the explanation. Rest everything as such, guys, is exactly the same. There is nothing that you will have to worry about. All right. Hope you guys, keep studying well as such, beta. Whatever doubts that you have, you can get in touch with me. You can message me on Telegram. All right, guys. Chalo, I'll end the session then. All the best, guys. Bye bye.